What is accounting practice management software? Is it the operating system for your accounting practice? Is it an all-in-one software solution for accountants? Is it the crucial tech standing between your practice and utter chaos? Accounting practice management software should bring together all of your practice's mission-critical functions in one place to make your life and your practice easier. Stay tuned to hear more from our sponsor, Canopy, later in the episode and how you can receive a $40 Amazon gift card.
I feel like there's this sort of divide in our profession where you've got the people who are like, really, I'm going to play by the rules. But then you have all these people that are out there doing crazy tax credit stuff and really aggressive stuff and conservation easements and R&D tax credits without really checking things. And they're making bundles of money. They're growing fast because they're giving the business owners what they want.
Coming to you weekly from the OnPay recording studio. This is the Cloud Accounting Podcast.
Welcome to the Cloud Accounting Podcast. I'm Blake Oliver.
And I'm David Leary.
And our special guest this week is Jeremy Wells. Hey, Jeremy, how you doing?
Doing all right, Blake. Thanks for having me.
It looks like you're out on the road. Where are you at this week?
I am actually at the AI CPAs offices in New York City. I am here for a small group meetup, and we just got finished with that just in time to come join you guys.
Well, thanks for jumping on. I know I tweeted at you or I DM'd you maybe an hour or two ago, and I said, hey, Jeremy, there's been a lot of chatter on tax Twitter about pumpkin patches, and I'm thinking about carving a pumpkin this weekend. I found the whole thing to be really interesting, and I want to talk about it. But, you know, David and I are not tax people. Well, I guess everybody is a tax person according to some marketing campaigns, but we are not tax people in that we don't prepare taxes. We aren't tax experts. I'm a CPA, but I'm on the financial accounting side, the bookkeeping side. So we thought maybe we should have somebody who actually knows what they're talking about on this episode to kind of give some takeaways and context and, I don't know, just chat about it. So, yeah.
Well, I'm not sure I'm exactly qualified for that job, but I'll do my best for sure. I did jump into that fray a little bit, tried to at least until I got blocked by the original poster, but yeah, definitely kept up with that conversation.
Wait, do you want to share the tweet?
Yeah, so let's look at this original tweet. And Jeremy, would you mind reading this tweet for our listeners who are not on the live stream?
Absolutely. So this is from pinktax_CPA, and her tweet is, make your pumpkin patch trip tax deductible. Woohoo! Step 1, hire your kids and or spouse in your business. Right? Seems legit. Mm-hmm. Step 2, have a family business meeting at the patch. Now, what she means by family business meeting, I'm not sure. That I don't think that's a technical term there, but we can talk about that. Step 3, take videos for business posts and ads. All right. I think I'm seeing what she's driving at here. Step 4, discuss business over snacks, presumably snacks you purchased there at the pumpkin patch. And then step 5, keep your receipts and record of work done. And according to this tweet, if you do those 5 things, then you've got yourself a tax deductible family trip to the pumpkin patch. What could be better?
Oh, that's very exciting. I always love being able to deduct vacations and family trips and
to
absolutely.
rewind, the reason I have interest in this too is if I go back to Scaling New Heights. So we were at the conference Scaling New Heights, and it's in Orlando. And the day after the conference, obviously that was all a business trip, and my son was with me, and he worked the booth, and he's on the payroll of the LLC. We went to what's that place called? Universal Studios, wearing our Cloud Accounting Podcast shirts, and I asked Tax Twitter, I was like, "Can I claim the cost to get in?" Everybody's like, "Nope, you can't do it." Even though they actually read off the shirts and said it over the loudspeaker, but it doesn't matter.
Nobody
backed
with
me.
You on that one, David?
I didn't find anybody. I'm finding the wrong people, though. Maybe I need to get with a different set of Twitter people.
You just need to fire tax Twitter and go hire a CPA that'll agree with you.
Well, yeah. So I find this interesting because I kind of found myself in these questionable tax deduction situations as a bookkeeper because I would be putting together the books for my clients, and I would see all sorts of stuff come through that was of questionable nature. Like, should this really be a business expense? And when I first started doing that kind of work, it bothered me a bit. I'm also studying for my CPA, and I'm learning all about ethics and professional responsibility. And here I am coding, I don't know, like, just like, I can't even think of an example right at the moment, but just obviously, stuff that's like a personal credit card that's getting paid through the business. And it would bother me. But then at a certain point, I just said, you know what? I'm not the one preparing the tax return. Whoever does that can go ahead and reclass these entries. My job is just to do the books according to how the business owner wants them done. And so that's how I made my peace with it. And I'd be surprised if everybody who does this kind of work doesn't see this all the time. Like, at least, unless...
And as a tax professional, I understand that. And I have customers in my firm where we're doing both. We're doing the books and the tax return. So, we'll see transactions come through, and, you got to understand from our perspective, we're just seeing that little bit of cryptic information that's included on the bank statement, right? So, we'll see Target come through, or Walmart, or Starbucks, and we have no idea, what that transaction actually was. So we need some help from the customer to get some context, right? Did you just accidentally use the business card for this personal transaction? Did you actually meet one of your clients or customers at Starbucks? Those kinds of things. Now, as the tax preparer, if I'm not doing the bookkeeping, then there's the issue of, okay, you prepared the statements or you prepared the books according to the client's wishes, or just based on the best information you had. Now, as the tax preparer, it's still on me to do some due diligence as to whether, all of this stuff is truly deductible, whether it's correctly categorized. So, what am I going to do in the middle of tax season? Am I still going to go through the GL line by line and figure out if all of those Target transactions were in fact business expenses, if all of those Starbucks purchases were in fact, meeting clients at Starbucks? So it can get interesting. It can be a tough ordeal on both sides, for both the bookkeeper and the tax preparer.
Yeah, so there's two things going on that I want to talk about. It's that, what is our responsibility as CPAs, or just as EAs or tax professionals in general? What is our obligation to investigate this and allow it or disallow it? Because that can create a lot of tension with clients. And there's a penalty, really, in a business sense, for being super ethical as a tax preparer. You might piss off clients. They might leave you because you're not willing to stretch the envelope or completely rip up the envelope, as many of them want.
Yeah. Or
but then there's also just
that whole cost segregation Twitter thread that also happened this week, where he's like, firing.
You're jumping
CPAs.
ahead, David, because that was
that's a whole nother.
That's the other one on this theme, right? So, but the other aspect of this whole thing is the just bad tax advice thing that happens on social media, or super aggressive or completely incorrect TikTok tax advice, Twitter tax advice, from people who maybe don't really understand what the rules are, right?
Yeah. And so that was, a lot of the reaction, once the sort of initial reaction to this tweet came out, where a bunch of, CPAs, tax professionals jumped in and responded directly to her and said, hey, wait a minute, slow down. You're glazing over, you're glossing over a lot of stuff. You're kind of simplifying this too much. Each one of these steps can be in and of itself related to a legitimate tax strategy. And you're conflating some of these things. You're also, again, glossing over that there's some nuance to a lot of these things. But then, pretty quickly, the conversation turned, and I actually appreciated this. The conversation turned from just, is her advice here right or wrong? Is this what we should be telling clients? More toward, how should we even respond to, we as an industry, right? We as CPAs, we as tax professionals, enrolled agents, right? Whatever our role and our credentials are, how should we, as the trusted professionals, as the ones who's actually working with our clients and customers, and it's going to have to go back and explain whether this is actually true or not, right? Or whether we'll actually apply any of these strategies or not in our own clients' cases. What's our role, both in terms of dealing with customers when they bring us this kind of unnuanced advice that they've seen out in the wild, right? That's one aspect of it. The other aspect of it is, how do we directly engage with this kind of advice out there? Do we reply, right? Do we directly get in here and get into a debate, which can easily devolve into a pissing match of whether this is right or wrong? Or, do we not directly engage, but maybe we just try to, flood the ocean with our own content that's actually saying the right things. The only problem is anybody actually going to listen to us, when we're up against this kind of thing.
It's not exciting. Like, it doesn't feel like you're going to save me some money. And the other piece,
I have to say, like, this is a good tweet from the original poster. Like, it's a very appealing tweet. It's got a nice 5-step process to getting that deduction that you may not have known you had. Like,
this is great copywriting.
And she,
this is great
she has it on
copywriting.
Instagram
whether
as a
it's
video.
Tax advice or not.
It's the same tweet on Instagram or whatever. It's on Instagram as a video where it's all the things she talks about in that post. But the other thing that was in this thread is she kind of felt attacked. Kind of the old school accountant, white males jumping on a minority, younger female that's new to the industry. And I'm kind of like trying to digest that a little bit because I can see her point of view, why she feels like that. But I'm like, I know we knock big firms a lot, right? But we live in a day and age where in theory you could graduate college now, get your degree, start an accounting firm, and not go to work for another firm, right? And I'm wondering if, oh my God, I'm actually going to come up with a reason maybe why you should go to work for a firm, possibly. And I don't know her background if she did it or not. I can't find her actual website, her business, which is actually the big flaw in this whole thing. Like, if you're going to have social media accounts, don't you want to drive people to your website so they can engage you as a client? But that's another question. But my bigger question is, so I'm a young, green CPA. Are these the types of things where I would learn these nuances? I think you said that word right, Jeremy. I would learn these in my first 2-3 years at a firm. Is that the right vibe? Like, is that what this really is? It's green. It's just inexperience.
Well, it's interesting, David, the way you frame that sort of background, because that's actually my background. About 5 years ago is when I decided to, when I really committed to becoming an accountant. And, I followed the absolute non-traditional path of, I did not go to meet the firm's night. I did not compete for internships. I did not try to get a Big Four job. I found a mentor who was an experienced CPA who focused on tax. And, I relied on him for the first couple of years to help me get started with my firm. So I had guidance. It just wasn't in that traditional format of, I'm working for a firm and I'm being assigned work and I've got a senior and manager and partner overseeing my work. But to your question, this is what is difficult about our profession is there's nothing in the education that, is offered by an accounting program at a university. There's nothing even in the testing that you would get, whether it's the special enrollment exam for an enrolled agent or the regulation exam for the CPA that deals with taxes, right? You're never going to see a question about, hiring your kids, right, in your business. You're just not going to. And so, yes, these are things that, in your first couple years, probably either through your own clients seeing stuff like this and bringing it to you, or, you've been assigned a tax return if you're working in a firm. And so it involves that. And then you've got to go through the learning process. If you're on your own, hopefully that means going and doing research, right? Or you have a mentor, you have, an experienced professional that you're networking with that you can run these questions by,
Twitter could
and
be
they'll
your
steer
mentor.
you in the right direction.
Could be your
yeah,
mentor.
exactly. Yeah. Or you're getting that guidance at work somehow.
This episode of the Cloud Accounting Podcast is sponsored by Zoho. I'm sure you've heard of Zoho before. We've probably even mentioned Zoho CRM or Zoho Books on this podcast in the past. But do you really know about Zoho? Did you know that Zoho offers an entire suite of solutions to run your firm, including a CRM, expense tracking, bookkeeping, a full office suite, a support ticket system, and workflow automation? Did you know that Zoho offers a suite of solutions for your clients' bookkeeping, including bookkeeping, inventory, invoicing, subscription management, and a checkout app? Did you know that Zoho has an accountants program? Did you know that Zoho advisors get free access to 8 Zoho applications and a dedicated account manager? If you want to learn more about becoming a Zoho advisor, head over to cloudaccountingpodcast.promo/Zoho. That is cloudaccountingpodcast.promo/ZOHO.
So I want to actually talk about what is wrong with this, or what is right with this point of view. The idea of making a family pumpkin patch trip tax deductible. So Matt Foreman, we should give him credit for kicking this whole thing off. He loves to stir the pot, doesn't he?
Yes, absolutely.
He said, he took a screenshot of the tweet. And this tweet, I should also give credit to, is from Pink Tax. on Twitter. Say you don't know how, quote, ordinary and necessary, unquote, is defined by tax law without saying you don't know how ordinary and necessary is defined by tax law. And that made me think back to that phrase, which I did learn about ordinary and necessary as part of my income tax courses. And the IRS has definitions for ordinary and necessary, and that's sort of the broad way that we decide, or we are supposed to decide anyway, what expense qualifies as a business expense, as a deduction, or not. And so, what is, like, let's dissect this, Jeremy. What is not ordinary and necessary about this strategy?
Yeah, right. And I primarily work with small business owners, and this is probably the most common question I get. Can I deduct this? Right? I did this thing. And then phrased slightly differently is, I've got all these personal expenses that I'm paying. What of that should I be using the business card to pay for? Right? Those kinds of things. And so that's right. The guideline for that is ordinary and necessary. Ordinary means is this common throughout your industry, really? And so the way I phrase this with my own clients is if I polled 100 people that were doing the same thing you're doing, right, as self-employed people, as business owners, would most of them also be spending money on this thing? So is this just common in your industry for them to be doing that? That's half of it, right? And then you got to meet the other half of that, which is necessary. I think this is an unfortunate label for this part of it, because necessary implies that it's somehow it's required, right? That it's you would have to be spending money on this in order to stay in business. It's not quite that strict. It's really, is this something that's useful? Is this something that's beneficial to your business? Is it going to increase revenue? Is it going to make your business operate more efficiently? Right? Those kinds of things. So if you can meet those two criteria, right? Most people in your industry are also spending money on this. And at the same time, you've got a legitimate business, purpose for this expense, that you're going to increase revenue. You're going to make your business more efficient. Then as long as there's not somewhere else in the tax code or regulations or court cases that says, no, actually, this is not a deductible expense, then we generally say, yes, this is deductible, right?
So I find that helpful, that you said, well, for ordinary, it means common. I Googled this, and Investopedia says that the IRS defines ordinary as anything that is, quote, common and accepted, unquote. So you said, if you polled 100 people, a certain number of them would say yes to that. But the IRS hasn't actually defined a standard for what is common and accepted, have they?
No. And this is true of so many things that are both critical to the work we're doing and also really confusing and frustrating for our customers and clients, right? Is that we just don't have good working definitions of these things because there are so many edge cases. There are so many times where in your industry, right, you're running a business that is, that's publishing podcasts. So your microphone is probably ordinary and necessary for that. On the other hand, if I'm running an accounting firm, do I really need a microphone in that business? Well, I don't know, right? Can I make a business case for it? And so there's so many edge cases where we need looser definitions so that it's our job as professionals to make cases for whether or not this is actually a deductible expense or not.
So is it fair to say then that the only time the definition matters is if I am in tax court or if I'm talking with an auditor? Because if the IRS doesn't define it further, then it's only going to, the meaning of it is going to come down to what a judge decides or what an auditor decides.
This is why we have an entire, we call it the U.S. tax court. It's actually a system of courts. It's a few dozen judges that meet throughout the country. And it's one way that if a taxpayer and IRS disagree on a point and it's worth it to the taxpayer to pursue the matter further, there's some substantial financial cost at stake to letting the IRS have its way on this, then you can, under certain circumstances, you can appeal that to the tax court. And it's a court system at the federal level that exists solely to hash out these kinds of issues. What do we really mean by ordinary and necessary? What do we mean by reasonable compensation? What do we mean by all these different terms, by income? right? We don't have a great definition of income, and it's the most basic concept to our entire tax system, which is based on the income tax.
So similar to the definition of ordinary, the IRS definition of necessary is also rather vague. It's, quote, helpful and appropriate, unquote, but not indispensable. Like you said, it doesn't have to be required to run my business. It simply has to be helpful and appropriate. And you define that as, does it help me increase revenue? Does it have a business purpose in that sense? Which I would agree with, but I'm trying to see this from the original author's point of view, from Pink Tax point of view. These are so vague that I could
right.
I could make an argument. Like, I'm looking at her argument, make your pumpkin patch trip tax deductible. If I'm an influencer and, hey, I think I've got a podcast, right? I could make an argument that social media and podcasting is that is my job. It's my main source of income. If I hire my son as a model in my business and I put him all over my social media accounts, and then we go to the pumpkin patch and I'm posting all that stuff, and I talk about it on the podcast, why is that not ordinary and necessary? There's plenty of other influencers exploiting their children in this fashion. And if it helps me increase my listenership and my viewers, that leads to revenue, right? So that would be necessary. I mean, and everyone came on, people really came down hard on Pink Tax here for this.
Yeah. Oh, absolutely. Absolutely. And the way I think about this is, I don't, in my own firm, I don't work with any clients that are to the point at which, I would really go to bat for them on some silly things that they throw out there or they see on social media. But part of the both the beauty and the frustration with our tax code and our tax system is that there is so much vagueness. There is so much leeway. And I think a lot of taxpayers, the vast overwhelming majority of taxpayers, and therefore the tax preparers and tax advisors working with them, don't necessarily either appreciate that or understand that, or on the other hand, really have reason to take advantage of that. So, what do I mean by that? If you're a big enough player, right? If you've got millions and millions of dollars that you're playing with, and so you've got tax bills that are in the millions of dollars, and you want to take a swing at a tax strategy that has, a relatively low chance of succeeding. And so we have thresholds, right, that we're taught, whether this is reasonable, whether there's substantial authority for this. We've got all these terms, we've got all these different definitions of what it means, right, to where we as a profession deem this tax strategy viable or not. And it's actually a spectrum, right? So the question then for us as professionals is, one, do we want to advise our client to put themselves at potential risk by pursuing this strategy, right? And then two, do we want to risk our own professional reputation and license by advising them in that direction and going down that road with them, right? Now, what the real joke of all this is that, what Pink Tax is suggesting here is probably going to save you something like 15 or 20 bucks in tax, right? And the reason you get such a strong response of no is that almost no tax professional in his or her right mind is going to go to bat for a client to save them 15 or 20 bucks in tax. It's just not worth it. It's not worth it to the client. It's not worth it to us, right? And so that's really why you get such a vehement, strong no response to this.
So it's not really about, could I defend this, or is this right or wrong, or is this correct or incorrect? It's, is this worth my time? And
exactly,
it's really for this amount of money, and then the potential problem it causes you in an audit because you're doing this kind of stuff. I imagine that if an auditor goes into the books and finds the pumpkin patch trip, that's like a red flag. Now I'm going to dig further, right? So I think that kind of got missed in all of this, is that's like what it's really about.
And, there are, it's just, you gotta think about this, right? You got to look at the return on investment of this. Is this something that, if it were to get picked up in an audit, and here's another thing, is that the regulations that govern the things that we can think about when it comes to advising our clients on tax matters and representing them. If this got pulled for audit and we're going to IRS and trying to hash out whether this was viable or not, the regulations tell us we can't take the likelihood of whether this would be audited or not and whether we would succeed in an audit or not into account when we're advising the client. So we can't sit there and say,
wait, hold on.
Oh, well,
that's the core thing that matters.
I know. But okay, so this is what the ethical regulations say. I'm not saying it doesn't happen.
Yeah, no, I get it.
But the ethical regulations say that I can't sit here and say, you know what, Blake, I can save you $5,000 on your next tax return. And I know the IRS is so backlogged, they'll never catch it. So let's just go ahead and do it. That is me being unethical as a tax preparer and tax advisor. What
does
I
that
can
feel like that's
say
happening though
is,
on social?
Well,
it's very gray.
I don't think that's happening out loud. Okay. Yeah.
But I know that
I don't
happens.
think it's happening out loud.
I mean, that happens
it
in
absolutely
private conversations. People talk about.
And so the way I think it gets phrased probably more often and a little bit more legitimately is that, we can try this strategy. I can't guarantee IRS will agree with us, but I would be willing to wager that more often than not, and that's generally the threshold we use, more often than not, any given day that an IRS auditor would pull this, they'd let us do it. They'd agree with it, right? And that's a legitimate way of thinking about it.
But are we allowed to think that way?
We are. We can think of it
right.
in fact, we're told to, right? Like the tax strategies that we're advising to our clients, we need to meet that more often than not threshold. More often than not, this expense would be allowed.
Okay,
right?
Got it.
That's the rule.
But I can't.
Or this strategy would be allowed.
But we're not supposed to advise based on a risk assessment of whether or not.
Exactly. Like so we can't sit there and say, well, IRS is so backlogged, if we filed the return, they'd never catch it anyway, right? Your return there's a 0.2% chance your return's going to get pulled for audit anyway, so let's just go with it. Even though we know it's wrong, even though we know it wouldn't pass muster, right?
Yeah.
They probably won't catch it anyway, so let's go with it. We can't do that.
As CPAs,
as anyone who is going to be in the position of advising clients on how to deal with the IRS, right? The IRS called this practice before the IRS.
Unless I'm an unlicensed tax preparer, in which case I can do whatever I want, right?
Absolutely. Yeah. Right. And really, so the IRS distinguishes between preparation and what they call practice or actual representation. Right. And this is way beyond what any client is going to worry about. Yeah. Right. But you're right in that because unlicensed preparers aren't going through the ethical and practical training of how to be good tax preparers and tax advisors, they're probably not going to be thinking in these terms anyway.
This episode of the Cloud Accounting Podcast is sponsored by Canopy. As you've heard in previous ads, Canopy brings together all of your firm's mission-critical functions in one place: client management, document management, workflow, time and billing, and payments to keep your team organized. And having your team organized is great, but having your team spend less time on mundane tasks is even better. Did you know that Canopy has automation built in? Sure, you can still use an app like Zapier with Canopy, but for most firms, the built-in automation in Canopy's workflow module is plenty sophisticated enough. Your team can create trigger automations based on status, tasks and subtasks, as well as dates, be it upcoming, reached, or past. Then Canopy can complete the mundane tasks for your team, like automatically sending client requests, or automatically assigning the next task or subtask to a member of your team as they complete work for each client. Or how about a really nice email to the client after all the work's been completed? Canopy integrates with QuickBooks Online, Xero, FreshBooks, CRMs, form builders, spreadsheets, calendars, email, and of course Zapier. They have a mobile app, centralized file management, fillable PDFs, a client portal, task management, and the list goes on and on. To get a demo of Canopy and to receive a $40 Amazon gift card, head over to cloudaccountingpodcast.promo/Canopy. That is cloudaccountingpodcast.promo/CANOPY. It's time to streamline your firm with Canopy.
All right, I got another tweet for us to digest here. This is another gem from Matt Foreman this week at Foreman Tax Law. Tell me
he's on a roll.
He is, man. tell me you're taking incredibly aggressive tax positions that won't withstand audit without saying you're taking incredibly aggressive tax positions that won't withstand audit. I'm looking at you at Sweaty Startup. And he is subtweeting a tweet from Sweaty Startup, Nick Huber, who wrote, most CPAs act like they work for the IRS. Instead of building a case and getting aggressive within the laws, they take the easy road and encourage their clients to pay more than necessary. Easier for them and less headache when an audit does come. Fire those CPAs. And I think this one set off an even bigger firestorm.
And that guy's an audience. He has like 250,000 followers. He's got a significant audience. I guess he falls into that. People were starting to say it's a real estate boys or real estate bros, like it's in that space, which is actually kind of funny because I would argue that he just described most real estate agents. Right? Like they are very oh, we got to follow the laws this way. They're not very aggressive on when you go to purchase your house or sell a house. It's kind of, I find that actually the most ironic about his tweet. But
then on the business side, and I have had and have a lot of real estate agents and brokers as clients when it comes to their own businesses. They're a lot closer to what Nick is saying. They're a lot closer to, we want to be able to deduct all these things. We want to be able to defer some of this income or not report it and these kinds of things. So they're pretty aggressive when it comes to their own businesses and taxes. And then just like us in our profession, right? Like you're saying, they have to do their due diligence when it comes to their work for their license and those kinds of things.
And I apologize, he's in the self-storage space. He's like a self-storage bro. He's one of those guys.
Yeah.
So, which has a lot to do with real estate, right?
Yeah.
Mm-hmm. So if you're building those self-storage units, so one just went up in my neighborhood, by the way. People have a lot of crap, right? Like I don't want to own enough crap where I have to have a separate space to go put it.
Yeah.
But I can.
It's like they build one and then a few blocks down they start building another one. I mean, they're just kind of out of control.
The stats on how much stuff people have in storage in this country is just insane. It's like the only place in the world where we have so much crap that we have this entire multi-billion-dollar industry. But I digress.
Yep.
Okay, so this is related to me. In my mind, this is related to the previous tweet. It's just a different variation on a theme, which is I think a lot of clients, well, some clients get frustrated with accountants and tax preparers and CPAs because we say no a lot. We say, nope, can't take that deduction. I ask you, you're like, nope, not a business expense. I want to stretch the envelope. I know that my friend is deducting the Porsche. I want to do that too, right? And my CPA won't do it. Now, this is a much bigger thing. This is talking about cost segregation and taking aggressive, being aggressive with cost segregation in real estate, which is basically, if I understand it correctly, like accelerating depreciation so that you get like a big deduction in like your initial years of owning something. And like you can basically avoid paying tax for a long time, right? And hopefully until you even sell the property. So it's sort of like just deferring all that crap forward and really can really help you a lot with cash flow, right?
Absolutely.
But also is complex, and we get people doing these cost segregation studies that don't really know what they're doing, and they do it the wrong way anyway. But like I don't want to get into the details of like cost segregation and all that, but I just want to get into the thinking around this whole mentality, right? Which is, what's my job as a CPA or an EA when it comes to clients is like, I don't want to be the one saying no. I'm thinking as a business owner, right? I'm representing these clients. I'm helping them save money. I want to be able to tell them yes. I want to be able to say yes and help them save as much money as possible. And I feel like there's this sort of divide in our profession where you've got the people who are like, really, I'm going to play by the rules. But then you have all these people that are out there doing crazy tax credit stuff and really aggressive stuff and conservation easements and R&D tax credits without really checking things, and they're making bundles of money. Mm-hmm. They're growing fast because they're giving the business owners what they want. And those of us who are, say, more ethical, if you want to call it that, or more by the rules, like we don't grow as fast, right? Because you're at a disadvantage potentially.
Well, and then not even this guy, this Nick Huber guy, the Sweaty Startup on Twitter, he eventually in this thread talks about how he found this other accountant. He found Mitchell Baldridge CPA on Twitter. He's got like 50,000 followers. That like he found somebody, like you said yes, right?
That's absolutely right. If you keep firing your advisors, enough, you'll eventually hire one. that will go along with you. And that's when, you are not hiring an advisor, you're hiring someone to execute, right? And this is something that I think we in general as a profession can fall into the trap of, is not clearly distinguishing for ourselves and for our clients what our, the difference between those two roles. Sometimes we're executing work for you, right? Sometimes we're doing your bookkeeping. Sometimes we're, preparing your tax return. Sometimes we're running payroll for you. But then other times we're advising you, right? Other times we're telling you, look, these are some tax strategies we can consider, right? These are some business strategies we can consider. And those are two very different things. And if, you could be doing a great job on the bookkeeping and preparing the tax return, and if the customer or client doesn't like the advice that they're getting, or, the response that they're getting when they bring these ideas to you, then everything on the execution side doesn't matter, right, to them anymore, because they just want to get their way. But, you got to think about it, right? Like even the mafia, right? They've got CPAs working for them. They've got attorneys working for them. They've got real estate and insurance agents and bankers working for them, right? Eventually you will find somebody who will work for you and carry out the strategies that you want to carry out if you're a client.
And I imagine, going back to, like, you talked about the risk, right, of, this is maybe $25, may not be worth it. But, like, this guy, he claimed, he has this pinned tweet, how in the last 36 months, he and his partner, they've sourced, financed, and acquired $64 million worth of self-storage, right, and raised $21 million investor capital. At some point, the accountant's also got to be like, the money I'm going to get from this client is worth my risk of these tricky strategies. Is that a decision made at firms?
Yeah, well, I mean, absolutely. Think about it. If you're a small firm owner and you're running a primarily, tax prep firm for, mostly 1040s and small businesses, and you're charging, and I mean, the fees are out of control. And this is on the low end to me. But this is a topic for a whole other show, and I know a topic you guys have discussed a lot before. But let's just say, you're running a tax firm that charges $400 or $500 for a 1040, right? Now, if you a personal tax return and you file that return for a client, and then 6 months later they bring you a notice saying that you left something off, you left a form off, and it's going to make a $10,000, $20,000 difference in tax. And you've already been paid the $400 for the 1040. That was 6 months ago. You've moved on, right? You've got other clients who need you to do work for them and all that. Now you're sitting here, and the cost of having to deal with that notice, of having to deal with that potentially angry client relative to the work you did for them and the price you charge them for that work is much greater than if you're an accountant working with clients like Nick, where they're doing multi-million-dollar deals and they're paying you 5-6 figures a year in fees, and he might get the same notice. The number on the notice of what he owes might be different, but responding to that one notice, which, because it was such a much bigger transaction and a much bigger portfolio of transactions in the first place, you probably anticipated that notice, so you built that into your fee structure, your capacity planning, your business model, and so you're more prepared for that. And so you can have a relatively simple, straightforward notice coming into a small tax firm that just blows their capacity planning out of the water, whereas somebody like Mitch Baldridge can get a notice, 10, 20 times bigger in terms of the financial impact to his client, but he's ready for it.
That's a really good point, Jeremy. Like, it really depends on the type of client you got, the fee structure, how much they're paying you, and like your capacity in your firm. Larger firms can do this kind of stuff because they have the capacity to deal with the fallout of something going wrong.
Maybe it's you price into the model.
And I don't know anything about Mitch's firm and how he runs his firm, but if I were in Mitch's position, I probably wouldn't be the one directly handling that notice. I would have referral partners. I would have attorneys. I would have tax resolution specialists, right? If not inside my firm, then definitely in firms that I'm working with. And so again, I would have the strategies in place to handle this kind of thing, to where, to me, it's just it's a blip on the radar. It's part of the cost of doing business.
So if I'm pricing my services, we can do our aggressive tax strategies, but that plan's more expensive than our regular tax plan because there's a high probability I'm going to incur a bunch of other costs with that down the road.
And the client probably knows this, right? Like, Nick knows some of the things that he's doing, that he's talking about. They run into, this is another thing that, your typical W-2 earner who maybe has, they've got some wages and salary, they maybe have some interest and dividends on their tax return, but that's it. There's very small, almost non-existent margin of error there. There's no room to play with, right? There are no aggressive tax positions to take on that return. You get somebody like Nick where he's doing, 7, 8, 9-figure transactions multiple times a year. Well, the way we're reporting these things, the way we're taking deductions against that, the way we're trying to apply credits to all of this, there are so on the spectrum of aggressiveness, that to use his word, right? You can go much higher on that spectrum. And so therefore his accountants are going to build that in or decide whether they want to build that into the fee structure and the capacity.
That makes a lot of sense. This episode of the Cloud Accounting Podcast is sponsored by Liscio. Blake and I talk a lot on the show about client experience. A great client experience may be the biggest impact on a firm's success. Did you know that Liscio is so focused on improving the client experience that they have even gone as far as trademarking, and I quote, Client Experience 2.0. Liscio's all-in-one client experience starts with your own firm's experience. By allowing your team to do more together, having everything in one place like secure messaging, client-facing tasks, file exchange and storage, electronic signatures, client invoicing, and client emails. When you improve your team's experience, your client's experience will follow. With Liscio, clients can use the app on their phone to easily e-sign anything, scan and send you documents from anywhere, send messages, and best of all, pay you. If you want to save 40% of your time by having everything in one place and start delivering a client experience 2.0, head over to cloudaccountingpodcast.promo/Liscio. That is cloudaccountingpodcast.promo/LISCIO.
It's like we have, in this country, we have two economies. We have the economy of the wealthy and we have the economy of the middle class, right? And the people who serve the truly wealthy and the tax professionals and the accountants, and that's a lot of, most CPAs don't serve the middle class really, right? Like it's not a thing. And so there's a lot of confusion, I think, when we talk about this stuff online, like you're pointing out, Jeremy, that it really depends on who you're talking about, what business you're talking about, what kind of firm you're talking about, because it doesn't apply equally. But that's what's happening here, is we're having a debate. Yeah. We're having a debate between like small preparers who are serving average Americans and an entrepreneur who's, like you said, doing multi-million-dollar deals throughout the year constantly. Yeah. And what they need and what they can get is different. And unfortunately, the tax code is set up so that unless you are a millionaire, it's kind of hard to take advantage of a lot of these strategies. But then you've got people pitching these strategies that are for millionaires to average Americans.
That you just bridged it. That's it.
Right.
Or they're just posting about it on Twitter. And so you've got, starry-eyed clients that are chasing the American dream, and they come across a tweet or an Instagram post or a TikTok video telling them about this, cool new tax strategy, like they just discovered it, and that no CPA knows about it, even though, we all know about it, right?
Yeah.
And it saved them $30,000 in taxes last year. It saved them $50,000 in taxes last year, and their CPA, helped them get it. And you consume, as a lay person, right? As your average taxpayer, you're consuming this, and then you're going to your CPA, and you're saying, wait, my guy told me I owed last year. What's up with that, right? Like, how do I get this strategy? Yeah. Well, there's the tax strategies for somebody who's where you want to be and where maybe you'll be there in 5, 10, 15 years. And then there's the tax strategies available to you today. And I'm sorry, if you're bringing home a W-2 with high 5, low 6 figures, and that's really it. You're not self-employed. You don't own a real estate portfolio. You're not day trading on the stock market or in crypto, right? You're not doing these things to the degree with the level of intensity, the 5, 6, 7, 8, 9 figures that these heavy hitters are playing in. Those strategies, they're just not there. And the cost, even if you were eligible, even on the very low end, you were eligible for some of these strategies, the administrative and professional costs of actually implementing them in your case would far exceed any potential profit you could ever hope to get off of them. And it's just not ever going to be worth it to you. And that's what we're saying no to.
Right.
We're saying no to you right now, given your situation. I'm not saying no, this is a bad strategy.
Right.
I'm saying no, this strategy
sense.
isn't advantageous to you today.
But the problem is the way, and I understand that, and the problem is the way people hear that is they say, like, it sounds like you're saying, I'm too poor. You know, like and nobody wants to hear that.
Exactly. Go put together a $54 million real estate transaction, right? And then come back to me and we'll talk.
Well, Jeremy, thank you so much for joining us for this segment on tax Twitter drama. Perhaps we can make this a regular segment if it continues. We'll have to see if
I think that's a great idea. Yeah.
It could be its own podcast.
I'm a fan.
False tax narratives.
There should be a tax Twitter podcast. We should develop that, David, someday when we have time.
There you
go. Jeremy, though, you have your own podcast that we can direct folks to, the CPA Advisory Show by Jeremy Wells, CPA EA, and Chris. How do you say Chris's last name?
Chris Hervishon.
Chris Hervishon, CPA CVA. It's a show about advisory services, building and running an advisory firm, and how we use advisory services to help our clients. We look forward to sharing many great episodes with you. So you can listen to that on Spotify. You can listen on Apple Podcasts. Jeremy, how long have you been doing your own show?
So Chris and I started this back over the summer, and I think, as of today, we're about 22, maybe 23 episodes into it. So I think we're past the threshold of where most podcasts die. We're not quite to the threshold of, we're competing with you guys. Definitely not anywhere near that yet, but it's not a competition, right? We're all trying to, like we say in the tagline there, we're trying to come at this from the perspective of helping, based on our own perspectives and based on those of the guests, trying to help CPAs and firm owners, even non-CPAs too, run better practices and businesses. We've actually had some guests that aren't CPAs. A lot of our guests so far have been CPAs, but some of them aren't. We've had attorneys, we've had those working in the industry who aren't credentialed. So, and even some non-accountants as guests. We've had some people come on, talk about operations, talk about different aspects of running a business and ways that we as advisors can help our clients.
And I was just listening to the episode, the most recent one on October 26th with Kelly Mann, talking about how she went from being an auditor to starting her own firm, a niche firm it's audits of, are they 401ks?
Employee benefit programs.
Audits of employee benefit programs only, and then building software because she couldn't find software to help her run that type of practice. So that was pretty cool. And I think the app is called...
Kelly's story is incredibly inspiring. That was a really fun episode to do with her and talk about that. She actually benefited from the AICPA's Startup Accelerator and managed to build a piece of software that, is changing the way her firm operates and lots of other firms. So it's some pretty impressive stuff that she's doing with that.
Well, Jeremy, thanks for joining us. We're going to keep on going with app news. I know you're busy. You're in New York. You're at an AICPA firm get together, so we'll let you go back to that.
Yeah. Tell everybody we say hi.
Yeah, tell everyone we said hi.
Absolutely.
All right.
Thanks, guys.
Awesome.
Appreciate you having me. This is an honor and privilege.
Thank you, sir.
Thanks, Jeremy. Hope to see you again soon.
Awesome.
Do you have any non-app news before you jump into app news, or is that kind of the big one? Let's scroll.
Let's see. What do I have?
I have the FedNow
my
thing
stories.
we could touch on, but we could even do that next week, or unless you want to do that next.
I think we should just go into app news because we only have about
this ties to app news
15
anyways,
minutes left.
So, yeah.
Okay. So let's do it. Kick it off, David.
So app news. This isn't kind of app news because apps are going to use this service, but I think we've talked about this before for the last year and a half, how the feds are building a new program called FedNow.
Yeah.
Right.
They're building their own instant payment network.
Along with, I think, the cousin products, how they want to make the post office banks and they want to have their own digital currency. And so the reason this came up this week, so the big Money 2020 conference was happening in Vegas, and that's all the fintechs get there and talk about all the great things they're building. Well, the feds were there and they had a whole booth, and there's pictures on Twitter, and they're pushing this, and they had a big keynote, and they're talking about, and I'll let you play the video, but essentially they're saying they're 6 to 8 months from launch. So if you think about, you have your ACH, right, which has been around since the 70s, the clearinghouse, which everybody's very familiar with. It's kind of big batch text files moving money around, and then the banks recently tried to get together and they built something called RTP, real-time payments, but they're not letting everybody play. There's like 20 banks of the 6,000 banks.
That's like Zelle. That's what Zelle
and then
is.
Zelle and that stuff, right. Exactly. They don't let all the banks play. And so the credit unions are cut out, et cetera. So I'll let you play this video because it kind of paints a picture of what's one piece of this that's coming very soon.
Okay, so this says how the FedNow service will work.
In today's fast-paced world, time is money. More people, businesses, and organizations are demanding instant payments. That's why the Federal Reserve is developing the FedNow service, a safe and efficient instant payments infrastructure that will modernize the U.S. payment system. The FedNow service will give financial institutions the opportunity to innovate, enabling their customers to send and receive money in seconds, 24 hours a day, 7 days a week, 365 days a year. Funds will settle between financial institutions in real time, which means there's no buildup of interbank obligations, and end users will have access to the funds in seconds. How will the FedNow service work?
Okay, and then it goes on for a few minutes talking about how it actually works with the example of a coffee company that needs to send a quick payment to a vendor to make a quick order. And I mean, basically, it sounds a lot like what we've got now.
Except for the fact it's instant. That's the difference.
Right.
So instead of using Bill.com and all these AP payment processing products, and it's all instant payments now built on their rails.
And what seems to be different is that the FedNow system actually debits and credits the accounts at the two institutions, the credit union and the bank, the sender and the receiver. It actually goes in and makes the entry and eliminates the need for intercompany bank reconciliations. And that's what leads to the delay with the ACH network, as I understand it, is that there's these reconciliations that have to happen on a daily basis. Whereas this is instant, there are actually no more reconciliation accounts happening. So
it's not
that's
done
how
in
you
batches anymore, right? It's individual transactions.
It's individual debits and credits, direct intermediary. Yeah.
And they were there.
But like practically speaking, like the only difference between this from the endpoint user standpoint is going to be it's instant.
Yeah, I think that, and in theory, the apps won't change their UIs. They'll just be using a different rail underneath the covers. But what's interesting about this is, yes, the examples they give is the credit union, smaller banks, they're all going to be on board. But who they're really speaking to at these conference, at like this conference Money, are the third-party app developers, all these apps that we use. And so if this really is going to be available 6 to 8 months from now, and they're telling developers to get on now, this is going to change everything. It's going to change business models because like some of these apps charge if you want, QuickBooks, you're paying whatever, $10 to get next day or same day ACH, right? All these business models of making money on one day ACH are going to go away, right?
Well, and what they don't talk about here is
charge a fee. Yeah.
They don't talk about how much it costs. So how much is it going to cost an app to use the FedNow network? That's not in here. I'd be curious to know if it will be cheaper. I feel like unless somebody comes along and somehow disrupts QuickBooks, like QuickBooks makes a ton of money from payments, they're not going to make it cheaper.
Yeah. But I think they're trying to
like,
treat this like a utility, right? It's the way, like it's infrastructure of the country is the way they're kind of thinking about this. Because if not, people are going to use alternative means, Bitcoin, blockchain. Right. They're going to bypass the banks and bypass the rails. So it's just really interesting. It's interesting that they came so hard. They had a booth. They're probably giving out swag, right? Like the whole thing. So it's coming. So we'll keep an eye on it the next 6 to 8 months here.
Hey, this is not app news, but I have a fun story that I want to share with you because it's just too good, and it's on the tax topic. So we'll see if this video plays here. This is a tweet from Dion Grant. Tyler Perry revealed he once fired his accounting team after learning the IRS owed him $9 million. In business, it's okay to make mistakes. It's okay to learn, but do learn. I'll let you make a million mistakes, but you can't do the same thing over and over. And so then here's this video of Tyler Perry speaking. Let's see if I can play it for you. And here we go.
So this audit went on for 3 years. I'm spending hundreds of thousands of dollars in accountants for the audit, and I was getting so mad and so frustrated. I was like, why the hell is this going on? What is it? And what I realized in my frustration is that, wait a minute, there's something to learn here. Sit back and just see where it goes. We get to the end of the audit, and the IRS owed me $9 million. They owed me $9 million. And all my accountants come running saying, oh my God, isn't that great? Isn't that great? I was like, no, hell no. How did you miss me paying $9 million?
Everybody go.
So I had to stop going to H&R Block for my taxes at some point. So I learned in progress, and it's okay. Listen to me. In business, it's okay to make mistakes. It's okay to learn, to have to learn, but do learn. Don't let it keep happening over and over again. And that's one thing about me. I'll let you make a million mistakes, but you can't do the same thing over and over again. And that's how I run my business. Okay, here's the mistake. Let's fix it. Let's move forward.
So that's the ultimate insult. He called his accountants H&R Block.
That's pretty funny.
Yeah. Yeah. But maybe, hey, tying this back to our discussion, maybe his accountants were being too conservative and they were overpaying tax, and they didn't realize he qualified for all of these credits and deductions. And here he is, that he overpaid his taxes.
Yeah, or they're trying to meet that, 110% threshold of the previous years, or who knows, right?
I don't know, right? Yeah.
We don't have any details.
Tyler Perry makes a lot of money though, so yeah, it might not be actually a big deal, but for him it was, and
I'm glad you found the video, because there's a lot of hot articles that keep flying by, and I click in the article and there's nothing there. Clicking the article, I see the headline's great, but I'm glad you found the video on that. I thought that was a little concerning in a way. Yeah, so this was an article that was in another Bitcoin kind of pumping site called CoinGape, CoinGape. And the title of the article is "This Big Four Accounting Firm Launches Metaverse Client Experience." And it's talking about how Ernst & Young is going to provide metaverse-based network experience to their clients, right? And it's very all the EY. This is EY bragging about the metaverse, and it's a PR release, essentially, right? But the danger in this happening, the danger, and I'm starting to feel like it's irresponsible. If you're big accounting firms, I get it. You want to pretend you're all crypto-friendly and you're all of this. But what is happening is that's becoming marketing material for the scammers and the latest crypto scheme to show how legit crypto is, right? Like they're stealing the reputation of EY to show people it's safe, right?
So as I was preparing for this show this morning, I was looking at these YouTube videos, and an ad came on, and it was some guy pitching digital real estate investments, and it was buying land in the metaverse.
Did he use an accounting firm as an example who's done this to make everybody feel safe?
I didn't want to watch.
He should put that in his video.
I didn't want to watch the whole ad or click, because if you click on that, then I'm going to get all of the scammers, in my ads. But it did make me think back to this other story that I saw in Accounting Today. Wolters Kluwer plants flag in metaverse. Tax, accounting, and compliance software provider Wolters Kluwer announced that it has now established a presence in the metaverse. Specifically, it has bought virtual land in the blockchain-based platforms Decentraland and Somnium Space.
And so when they do this is exactly my point. Because now that guy who made that video trying to get you to buy land, you'd be like, look, this accounting firm did it. It must be okay.
Right. So it legitimizes something that's completely idiotic, because we talked about how a lot of these metaverse platforms have maybe dozens or at most hundreds of users a day. And it's not like a real thing. Nobody's doing this right now. And so if you buy land in the metaverse, you're wasting your money, or you're just spending it on, PR. But I think the funniest thing about this whole thing is that Wolters Kluwer is like the tax software provider that does not have a true cloud tax product. So instead of investing, of investing in making their product cloud compatible and cloud first, they're freaking buying land in the metaverse. What a complete disconnect. So maybe I can go into the metaverse and I can interact with the servers, virtual like servers in my office that I'm using to host your software. Like, you know, like what's the, yeah.
I don't get it. It's just, but I do think that these publicity stunts accounting firms are doing with crypto and the metaverse and Bitcoin and all this stuff they're doing because they want to look like we're hip and we're cool and we're on top of stuff and get all the buzzwords on our blog post are being exploited by the scammers.
Yeah. Well, I got another one here, and then we're almost out of time, so I'll let you take the last story. The IRS is going to put CallEnQ out of business. They are eliminating line cutting.
So good to go.
Yeah, so the practitioner priority service line has been clogged up by the service called CallEnQ, which puts bots in the queue, and then you can pay CallEnQ hundreds of dollars a month and buy your way to cut in line, essentially. And the IRS said in an email on Friday to tax professionals that it has initiated a pilot program that now requires PPS callers to repeat certain phrases before they're transferred to an IRS phone assister. They're using speech recognition technology to ensure a live person is calling and not a mechanical advice. And CallEnQ said basically on its website that it's suspending its service. It's shutting down because it can't deal with this.
Yeah, Ed Zoller wrote a blog post, and he has some quotes on this. But apparently, you know, they sent this letter that said soon, but apparently it meant 4 days later because this is a quote that's what he said. It looks like they started this morning with the practitioner line. They are now asking questions like, what is the sum of 4 plus 1? Because that's how they'll know you're an accountant. You'll have to answer the question correctly.
Now, I'm a bit disappointed that CallEnQ doesn't have AI speech technology where it can defeat this verification because it's pretty good now, but I guess they don't. So,
but I think the next step is you're going to record your voice. But even that eventually could get hacked because CallEnQ could call you, record your voice, and then have that re-engineered. There's probably ways to do it.
It's like the editing software we use, Descript, has this ability where you can feed it 20 minutes of your voice speaking, and then it creates a model of your voice, and it can speak what you type. It's not totally perfect, but it's pretty darn good.
It could probably say 5. It could probably say 5 good enough.
Yeah, you say 5 in your voice.
Yeah.
So I got lots more stories, but they're gonna have to wait until next week because that's all we got. That's all the time we got for this week.
And can tax
Thanks
Twitter
to everyone who
give us a
joined
break
us
for a week? Just give us a break. It's just too much.
Thanks to everyone who joined us on the live stream on YouTube. Subscribe to our YouTube channel, Cloud Accounting Podcast, to get notified when we go live. We usually do it Fridays at 10 a.m. Pacific. And so if you hit that subscribe button, you'll get a notification on your phone.
And it works. I got it because I forgot to put Do Not Disturb on. So I just got it today. Like, happens right away as soon as you say we're live.
And that way you're getting the news ahead of everybody else because it takes us a few days to get these episodes out onto the regular feed. I'll see you here next week, David.
Next week.
All right. Bye.
Bye, everybody. Time for the classifieds. Are you still paying 1% for ACH to receive money from your customers? With uCollect, you can pay as little as 30 cents per transaction. uCollect has two-way sync to both Xero and QuickBooks Online and gives you the features that the accounting systems lack, like installment plans, secure automatic payment setup invitations, automatic receipts, and allows access to other credit card merchant providers beyond the ones that come with the accounting system, giving you more control over the service fees that you pay. For more information and a 30-day free trial, go to ucollect.biz/CAP. That's ucollect.biz/CAP. Check out Hector Garcia's new app called Right Tool for QuickBooks Online. Instantly increase your productivity with keyboard shortcuts and more. It will save you seconds. The app is free at the moment in public beta. Check them out at righttool.app. That is righttool.app. RIGHTTOOL.app.
I don't care where you live in the United States. If you're a CPA, you have to take ethics continuing education. And I don't care who you are and where you live, you hate taking ethics continuing education. That's why me, Greg Kite, and my buddy, Adam Browd, we created a podcast called Drunk Ethics, where we unfold and expose all of the inner secrets of not just ethics, but how to become more ethical and to promote ethical behavior at your workplace. And we do that while we are getting progressively more shit-faced during the course of each episode. In each episode, we take 7 shots every 7 minutes. And so at the beginning, we are scholarly, and by the end, we are drunk yet still scholarly. If you're interested in this podcast, which I know you are, anyone can listen to the podcast for free. It's out there. You can find it. But if you want CPE credit for it, NASBA certified CPE credit, it is a premium course on Earmark. So if you're already a subscriber to Earmark, it's going to be more than that. But listen, it's worth it because of 2 reasons. First off, you know your company, you know your firm's going to pay for it and not you. And second of all, it's worth it, damn it.
Want to get the word out about your newsletter, webinar, party, Facebook group, podcast, ebook, job posting, or that fancy Excel macro you just created? Why not let the listeners of the Cloud Accounting Podcast know by running a classified ad? Hit the show notes for the link to get more info.